Our all-time high on October 6th, we're almost 27% off that all-time high. That all-time high is $126,160. It's been 42 days since that all-time high. And again, we are a little under 30% away from that all-time high. Bitcoin block height. What was the last Bitcoin block mined since I hit record? It's 924,075. Expectations that Bitcoin was going to go to the moon much quicker. I hold the opinion that this is a price correction. I think we're setting up for new highs. I do not believe, as I've said on the show, that this is a 4-year bear cycle and we're in for 2 years of down. And I want to be able to explain that to you guys today and make my claim. And if I'm wrong, I'm wrong. But I feel very strongly and very convicted that I'm not.
Bitcoin's sharp drop and collapsing sentiment signal a deeper setup unfolding beneath the surface. Jack Mallers explains that Bitcoin is trading well below its October peak, pushing sentiment to its lowest point since the FTX collapse. With nearly 60% of holders underwater, the mood feels heavy, but Mallers insists this is simply a normal correction, not the start of a long bear market. He remains confident that investors are misreading volatility and that Bitcoin is setting up for new heights rather than breaking down. Mallers then turns to gold and global macro forces, noting that central banks, especially those of BRICS nations, are rapidly accumulating gold in anticipation of a U.S. inflationary default. As trust in U.S. treasuries weakens, these countries are shifting toward neutral stores of value, such as gold and Bitcoin. He emphasizes that gold's surge this year shows this global transition is already underway, not a distant possibility. According to Mallers, the real pressure on Bitcoin comes from U.S. politics and an arid liquidity environment. The Trump administration has talked about large-scale money printing but hasn't acted, creating volatility when combined with tariff tensions and spending restraint. He recalls sharp moves earlier in the year caused by similar liquidity swings. Mallers argues that until money printing begins, something he believes is inevitable, Bitcoin will react strongly to political signals. Even so, he sees the overall path as bullish, with current turbulence marking the system's strain before the next wave of liquidity. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors. Don't forget to tap the bell icon for more daily insights into the financial system. Thanks for watching.
I'm talking to you guys at a Bitcoin price of $92,280 US. Bitcoin's market cap is now below $2 trillion. We're at $1.84 trillion market capitalization. Our all-time high on October 6th, we're almost 27% off that all-time high. That all-time high is $126,160 US. It's been 42 days since that all-time high. And again, we are a little under 30% away from that all-time high. Bitcoin block height. What was the last Bitcoin block mined since I hit record? It's 924,075. And really what I'm going to do for you guys is give you my vantage point on the price. I think sentiment is as low as I remember since the FTX collapse. I don't remember Bitcoin being 25% off its highs and sentiment within the industry being so low. But a fun fact for you guys, 60% of the Bitcoin owned today has been acquired above the price it is now. I'm going to repeat that again. 60, not 16, 60% of the Bitcoin owned today has been acquired above the current spot price now. So over half of the Bitcoin owners are underwater. And so sentiment feels really heavy. It feels really dark. There's a lot of people that either have not been through classic Bitcoin price action, an asset that can be this volatile, or they had expectations that Bitcoin was going to go to the moon much quicker. I hold the opinion that this is a price correction. I think we're setting up for new highs. I do not believe, as I've said on the show, that this is a 4-year bear cycle and we're in for 2 years of down. And I want to be able to explain that to you guys today and make my claim. And if I'm wrong, I'm wrong. But I feel very strongly and very convicted that I'm not. Central banks and governments around the world are buying and accumulating more gold. And we've talked about it in specific BRICS nations. China, Russia, India, Brazil. They've been buying swaths and swaths of gold with the expectation that the United States is going through an inflationary default. They have to print what they owe. And if that's true, then foreign nations cannot capitalize on US treasuries and US debt. They have to capitalize on something neutral. They're using things like gold and Bitcoin. If you think about it, guys, like how can you survive an inflationary environment? You survive an inflationary environment by buying something that can absorb like a sponge all of the fiat liquidity, and things like gold and Bitcoin can. And so gold is already telling us where the world is going. That decision has already been made. We are like, you have to understand what I've talked about on the show is these things are happening. They're not about to happen. They're not going to happen. I don't think they're happening. They are happening. Gold has added 10 Bitcoin market caps to its market cap this year. This is happening. It started already. But my second line in this tweet reads, Bitcoin selling off tells us that the system will crack before they're forced to print all the money. And so this gets into politics. Politics is money in the fiat era. And, you know, a lot of my point that I'm about to make is that the Trump administration hasn't printed the money yet. They've talked about printing the money. They campaigned on printing the money. According to the math, they literally and physically have to print the money, but they haven't yet. This has been one of the driest liquidity chapters in the last, 5 years. For the United States of America. Think about this year alone. We started off where Elon was going to doge the place and send us into austerity. And we talked about on this show how that was just a moronic idea. And a lot of you are in my comment section, defending Elon Musk like he's family or like you're married to the guy. Give me a break. He's a smart guy. We owe a lot to Elon, but it was a really dumb idea. It would have sent us into the greatest depression that anyone's ever seen. It would have collapsed the world. We would have been sent into rapid austerity and no one would have been happy. And of course that idea didn't work, but it was very anti-liquidity. It was very anti-liquidity. The government was spending less. They were puking less dollars out into the market, which is fine. And then we had the tariff wars. We have the trade wars. And so the combination of the two, that's when Bitcoin on April 2nd crashed. Remember when Bitcoin hit 75K and there was no dollar liquidity and Trump was standing up against China and Elon was going to fix the government by firing everybody. And then we reversed that in 5 days. And that's when Bitcoin went from 75 to 125,000, right? And after that, they haven't been able to follow through and print the money. They haven't. So Trump's tariff truce became an untruce, and he goes back to negotiating with China, back to 100% tariffs.
Jack Mallers argues that Bitcoin is the only asset truly reflecting the real state of fiat money because it is the only market still functioning without manipulation. He explains that if Bitcoin were entering a multi-year bear market, it would imply that US and global fiat liquidity will keep tightening for years, just as it did from 2022 to 2024. Using Arthur Hayes' Fiat Liquidity Index, Mallers shows how Bitcoin surged earlier this year under the assumption that the government and the Fed would begin printing again, but as no liquidity arrived, tariffs persisted, political gridlock intensified, and the Fed resisted easing. Bitcoin corrected back toward the underlying liquidity trend. Mallers then addresses the misconceptions around Bitcoin ETF inflows and institutional interest. He explains that much of the ETF volume was never true Bitcoin adoption but rather a basis trade, where large institutions buy the ETF and short futures to collect a small yield. This trade is attractive only when it outperforms the Fed funds rate, and the green spikes on ETF inflow charts match the moments when this yield temporarily surged. Now that the basis trade is no longer more profitable than risk-free government interest, outflows are appearing not because institutions are abandoning Bitcoin, but because the yield opportunity has disappeared. Mallers stressed that firms like Vanguard never buy Bitcoin for exposure, they were harvesting short-term yield. So, the current ETF outflows reflect shifting liquidity conditions, not the end of long-term Bitcoin demand. Let's get back to the interview.
Bitcoin is the only asset class that actually is the best expression of fiat, its current status, both to the downside and the upside. It's the only thing that's telling us the truth because it's the only free market we have left. And so this is a lot of the basis of my view, is that if Bitcoin's going to go through a multi-year bear market, US liquidity and fiat liquidity globally is going to continue to tighten for many years to come. The reason we were in a bear market from, call it 2022, the end of, until 2024, is because they did tighten liquidity, which I'll get to in a second. So anyway, I keep saying I'll get to stuff without moving slides. So let's get going. So this is Arthur Hayes Fiat Liquidity Index. It's a little scratchy visually. It's not the highest quality image I've ever shown you guys, but what it's showing, and for those that are listening on the podcast airwaves, what we're all looking at, there's two lines. The goldish orange line is the Bitcoin price, and the white line is the US Fiat Liquidity Index, okay? Now, the Fiat Liquidity Index is down about 10%. Now, what you can see is that the Bitcoin line went up. So this is called from April earlier this year, and it peaked in, September, October. We had this, $125,000 mark. What did I say our all-time high date was? October 6th, okay? But now you can see the yellow line coming back down towards the white. And my point is, the reality is that the U.S. government has not provided the fiat liquidity to keep this financial system going. This financial system, as we talked about, it only works if they keep printing money. There is no other option. They have no other choice. And Trump's campaigned on it. And this isn't a left or a right or a blue or a red. You guys know I'm orange. I'm a Bitcoiner. I don't do politics. I don't believe in politics. I think affecting change is in the private sector by building businesses and supporting things like open source software. This is just a math thing. This is just they have to print the money. And what this chart shows is that Bitcoin tried to lead what the market thought was money printing. You saw gold starting to run, stocks starting to run, Bitcoin started to run under the assumption that Jerome Powell would start printing money, that Trump would taco, so Trump always chickens out is what that stands for, and that there would be some Chinese agreement. And there hasn't been yet. Tariff wars are still lingering. The government shut down. The Fed is being very political. They refuse to abide by what Trump wants. Now, whether that's good or bad, that's just the truth. And so what you can see is the orange and yellow line, it's contracting back towards the white. The market is just correcting back to the natural state of things. And the market is saying, like, the Trump administration has to put up or shut up. And use anything you want. You can use the overnight rates. So we've talked about the overnight rates and how chaotic those have been and how those have been extremely stressed out. We've talked about the TGA. And so here's the Bitcoin spot ETF flows. And so the green bars are net inflows and the red bars are outflows. And I just want to talk about some of the narratives because part of this is really dispelling what you guys are seeing online of Bitcoin's going to 20K, the bull market's over, 4-year cycles, everyone's an idiot. A lot of everyone's thesis was we're seeing massive institutional adoption via ETFs, and we're seeing massive institutional adoption via MicroStrategy and this whole treasury company phenomena, which I've said 21's not a treasury company. If you guys want Q&A on that, I can answer it at the end of the show. But what we're looking at is the ETF inflows. And I want to kind of just dispel this notion that, certain large institutions were super excited about Bitcoin 12 months ago and are lesser excited now. A lot of Bitcoin ETF volume, sorry to burst your bubble, is a basis trade. So they're buying the ETF and selling Bitcoin futures, and they're collecting the difference. And the reason they're doing that is for yield. And so if you look at, this is the annualized basis that you can collect by doing this trade. And I know that it says Binance here, but it's Binance and the CME are effectively the same. And what you can see are these little spurts of when this trade is really, really profitable. And people do this because it makes you more than the Fed funds rate on these peak moments. And obviously everyone is trying to harvest yield. Yield is a convoluted term, but these large financial shops are trying to harvest yield. How much return on their cash can they get effectively risk-free? The most risk-free is lending it to the US government because the US government can print it and pay you back. But something that's not too far off is something like this basis trade where you're buying spot exposure to Bitcoin and you're also selling it via futures. And so you're delta neutral on Bitcoin. You're not taking any directional. If Bitcoin goes down or up, it doesn't matter. You're making the difference. And so you can see these green bars. You see these little pockets of where the green goes up. It looks the same as the pockets of where this spikes. And so I hate to be that guy, but people like Vanguard don't give a fuck about Bitcoin as much as you and I. And hearing me say it out loud probably isn't surprising, but sometimes on Twitter, it gets totally misreported of like, oh my God, Vanguard bought all this Bitcoin. Meanwhile, they refused to, list it as an option for their customer base. And their CEO at one point was shitting all over Bitcoin. They weren't buying Bitcoin to the ETF to gain actual exposure for themselves. They were running this basis trade. Okay. So I just want to say that right now, if you look at the far right, this is not a time where this basis trade is yielding you more returns than what Fed funds will give you. And so when you see net outflows from the US ETFs, yes, are people less exuberant about Bitcoin?
Recent volatility reflects tightening liquidity across the financial system rather than signaling a collapsing market. Bitcoin, gold, and institutional flows are all reacting to the same underlying pressure: the absence of new money in a system that depends on constant expansion to function. Political uncertainty, delayed money printing, trade tensions, and the unwinding of yield-driven trades have caused the market to adjust back toward the natural state of liquidity. These movements are not signs of waning demand but rather a recalibration as the market awaits renewed support. Once policy shifts and liquidity return, as it inevitably will, the assets built to absorb that expansion, particularly Bitcoin and gold, are poised to lead the next significant phase of growth. How does tightening global liquidity affect Bitcoin's price and the broader financial markets? So stay tuned. Don't forget to like and subscribe for more daily insights. Thank you for your support, and I hope you enjoy the video.